Shout out to you today, man. It's good on a Sunday. I hope you guys are winning. I'm back with the banger. This is another YouTube video, and in this specific video, we're analyzing GBP US. Oh, GBP AUD. And so far, our external structure is bearish. Our internal structure is bullish. And then our minor structure is bullish too, which is very beautiful because it sort of sets us up with an intraday anticipation while we await price to get to levels where we expect our swing positions to begin to be ripe and ready to be taken all the way to the downside, because we are aware that structure is bearish at an external level, which means the weekly time frame is showing us that we are continuing with bearish delivery, and we just had a retest of the lowermost level, and so we really haven't broken structure. But as soon as price shoots below this area, we've got a break of structure, which is something that we can definitely look forward to happening, or price really pushing up into our deeper levels to garner more strength to be able to push price all the way to the downside. Nonetheless, this is all we have so far on the weekly time frame. And so immediately what jumps out at you is that we've been experiencing rejection twice now at the weekly breaker block. Okay, we've been experiencing bullish delivery and we've been experiencing a lot of aggressive sells from the breaker block, and so normally when this happens, I mean it hasn't quite taken the lows out, and it was in fact being resisted by this institutional candle, which is a demand area on smaller time frame. And so there was a lot of demand being introduced in the market at these levels to push price higher up, resisting this bearish pressure that is being dropped down by the breaker block. And so we kind of expect that we're going to take this breaker, push up into these imbalances, and eventually get to this area, because we experienced the manipulation of this high after structure had changed. We experienced the manipulation of this high where price shot above but closed below, and so this was just a liquidity snatch where liquidity was swept to sponsor price coming all the way down here. This was very beautiful delivery. I mean, had you seen this, you would have taken it there and held and held and held and held. You'd be tired of holding. Your hands would be golden by now. Nonetheless, I'm gonna hop over onto our daily time frame. There isn't much to see on the daily, but we're just going to peruse through it, have a sense of what's going on down there. Structure broke to the upside, and so of course we do expect this to be a deep retest of the low as far as the structure is concerned. And once that has happened, we expect the price should at the very least take these highs. And so I'm just going to mark that out as a targeted area for our initial partials, initial partialing area. And yeah, for our buys. Cool. Now we've experienced that, I'm just gonna shoot down to the weekly time frame, and of course our secondary targets are somewhere around these areas, and we'll have higher targets all the way deeper up into the weekly supply area. So I'm gonna quickly jump to the 4-hour time frame, because this is where we start to begin to see some beautiful price action. The delivery was beautiful, typical classic textbook SMC playing out in a very way. I'm very skeptical about price actually coming back to this area, because this was a mitigation of this extreme order block. This was a mitigation, and so pushing price up. This is what we're expecting. You see what I'm saying? Nonetheless, we know that we're bullish in our internal structure, and so we've got beautiful confluences telling us that price is indeed in a healthy place to push price all the way to the upside. I'm seeing a massive imbalance right above this institutional candle, and ignoring these minor pushes backwards, kind of sets this up to be a giant imbalance over there, which also gives us an idea that price may be interested in pushing a little bit deeper before it actually goes back to mitigate and actually make sure that price is fair, because the delivery was very, very, very aggressive shooting up. And then, if you were in here, you chowed, and you chowed nicely. Actually, one of the guys that we exchange analyses with caught this entry and took it all the way to the upside. I think he took his partials right around here. Price is still showing some bullish intent. We are coming down. This high, this daily, this 4-hour high hasn't been taken, so we do expect price to keep on coming down. And now I'm going to show you essentially what it is that we use to determine that we are indeed ready to take price all the way to the upside. We got another break of structure taking price all the way to the downside, and then an extreme, a test of the extreme level. I actually put this in my call out bubble over here. Let me just bring it up so that you guys can see what this is about. So this is a protected low, essentially a low that we weren't supposed to go beneath if structure is to continue to be respected. The low was respected, so we can anticipate price to remain bullish up until it reaches and possibly annihilates the adjacent supply to create new highs. And the adjacent supply is essentially this breaker block, because this is where a lot of the supply was being introduced to push price to the downside. Hence our targets are over here. We do expect this is going to be taken. No oohs and ahs about that. And so yeah, let's zoom deeper into price. We had a break of structure to the downside, and then which was giving us this high as the last area of supply. Right, and so we took that supply area out, going up to the higher side, and as if that wasn't enough to convince you that we're ready to push up, we annihilated these supply areas, and now we're just drawing back down to garner more strength so that you can shoot higher up. And so now we're going to zoom into this area. I don't think I need to say anything more. If you understand structure, we had a break of structure to the downside. This now makes our protected high, and when it gets annihilated, we're sure that price is looking to go up. I'm just going to shoot down to the 1 hour time frame. Trying to keep these videos short for you guys so that you don't get too lost in the details, minimizing what it is that I share. And I will interact, I will gauge the degree of interaction that I need to maintain within these videos based off of the comments that you guys drop, giving me an idea of what it is that you're unclear on and what it is that I need to speak more on. And so this is minor structure. We're on our H1. We'd be looking, this would be presenting a lot clearer on our 15-minute smaller and time frames, where this was the very last minor high, minor lower low, and then break of structure right over there. Cool. So here's something interesting. Well, it could be inducement, so I'm just going to mark that out as inducement. So yeah, this could be our inducement. Of course, yeah, levels like this do get somewhat of a reaction, but it's not areas where you buy from to see those incredible RR playing out as far as price is concerned. And so yeah, we're all the way up here. This is very high, by the way. But we do have news, and I think one of them is regarding the inflation. 25 Jan inflation, which is rather somewhere during the week 25th. It's a Wednesday. And so essentially my expectation is to have something towards this effect where price comes all the way down there and then mitigates an order block that I identified on the 5-minute time frame to take price all the way to the upside. It's trading view kind of embarrassed me again. Cool. So we do see and anticipate that price is going to shoot all the way down there. It might not, but these are areas where we are most comfortable taking trades from, and this is purely from a statistical analyses to bring probability and have it work for us and play towards our side, because forex is something that is not entirely and very, you know, it's got a lot of mathematics within it, and so there isn't clarity and absolution as far as analysis is concerned. But what you try to do is that you take entries at areas that maximize your probabilities. And so when you have two entries that are well defined and have a proper narrative to support why you are expecting price to play out in a fashion that you have identified within your analyses, it makes it much better for you as far as risk is concerned. Because if you're risking twice, and my usual targeted risk reward is 1 to 10, and so if I'm risking twice, when I get both entries incorrect and I get invalidated twice, I lose 2R. But should one trade play out during the week, I've got 10 times what I've got 10 times what I lost in each one of those trades. And so that essentially makes it more, it brings probability towards my side, because the entries, I might have to wait long and I might not be able to take a lot of entries, maybe 2, 3, 4 a week. But when I do get an opportunity to dive in, I dive in hard with proper risk, and my reward is very, very usually. So this is essentially what we're trying to do. Linear programming, bring mathematics and statistics on our side to make sure that our trading balance continues to grow in an exponential fashion. So yeah, other than that, these are the setups that I have, and I've just gone into an explanation as to why it is I anticipate these. This is a 5-minute institutional candle within, sorry, this is our 5-minute order block within our 4-hour institutional candle, and these are like the very deep levels where there's some amount of liquidity that is to be snatched around these equal lows, and then diving into that order block to grab to grab whatever it is that we want to mitigate and push price all the way to the upside. This is a 1 to 33, like, yeah, 1 to 32 risk reward. And so on my trading account, what I do is that I risk $50. It's a 10K account. I risk $50, and then I stand to make $500 minimum on my 1 to 10 risk reward. And then this is 1 to 16. It can be refined a little bit better. I mean, we're going to look at how price plays out when it gets to these areas. Obviously, this one I'm going to take it off the bat, and then when I get to these areas, I'm going to look at how price is playing out and see if it's not maybe trying to come down all the way to these deeper levels, and then that can make our risk our risk reward a lot better, because it means instead of having an entry that big, it might be much smaller, bringing us to those high risk rewards. You understand? But our institutional candle is right over here. There are people who like to take entries at the 50% area. I don't know what the justification for that is, so I won't blindly volunteer to do something that I'm not sure why it's done, under which circumstances, whether it's a one size fits all. But I hate mechanizing the market, because it's the quickest way to lose money. You follow the story, and the story takes you to the money. Cool. So yeah, this is my analysis for GBP AUD. I do see this playing out very well, but ultimately it is a conversation of hope. We've had that internal change of character showing us that price is intent actually on coming down. Sorry, that minus structure change of character, so price is intending on coming down. We're going to check out price action to see if we don't get a possible W formation that breaks structure, because obviously this is how price is expected to continue delivering. You see what I'm saying? So this one I'm taking it off the bat, and then I'm expecting to see something like this for me to know whether I should hold it or not. You check what I mean? Otherwise, if it doesn't give me something like this, where just to show you justification, if you're not quite clear on the principle, this would tell me that if we grab this area and then we break the previous high to give us a change of character, you know, if you get something towards this effect. Okay, spinning, if you get something towards this effect where there's a break of structure taking price to the downside, taps into our order block and then shoots back up, invalidating the previous high, then we know that if price comes down according to textbook SMC, it shouldn't go below this area, and so we can happily hold while price comes back, because we know that when we do bounce, we're going to bounce high and for long. So you're going to hold these trades all the way till out. Oh my goodness, those risk rewards were not even at the targeted area. This is TP1. So we've got 42 here, we've got 36 there. And then cool. But of course, everything is a function of refinement. I'm not looking to take a confirmed entry over here. I'd want a confirmed entry to take place around these areas, and using a smaller time frame like the second base time frames helps a lot in situations like this, because you can have that play out and have it play out beautifully on the 5-second, 15-second time frame, where you have a change of character that is very convincing, and then when the price comes back, you're using 15-second order blocks to take your entries. Man, when you're getting the money, you're in the money and your risk is minimized. So yeah, that's what we have for GBP AUD. Thank you for sticking around. You guys like, subscribe, share this video, tell your friend to tell their grandmama that there's money to be made on the markets, as long as they stick around and watch these videos. This is pre-analysis, by the way. I'm going to take screenshots and maybe do a market recap next week, and just breaking down how everything played out versus how we expected things to play out. And so yeah, see you next time.